The US dollar has been growing steadily throughout the whole week. However, on Friday, it moved down. Traders were disappointed with the weak data on the US weekly jobless claims. The report showed that the number of initial jobless claims unexpectedly increased. The US dollar index, which measures the strength of the greenback against a basket of 6 major currencies, dipped below the level of 90 and 60. The growth of the US Treasury yields keeps the US currency from falling more sharply. Traders have factored in that the US labor market is recovering slower than expected. They also remember quite well the dovish rhetoric of the Fed. The regulator underlines that the situation in the labor market is a key indicator that determines the health of the economy. Next week, apart from the news on additional stimulus measures, investors will focus their attention on reports that give hints about the US economic recovery. The US dollar also lost ground against the yen. We were confident that the dollar-yen pair would resume its upward movement today. Yet, disappointing data from the US labor market did not allow the bulls to exert power today. Additionally, the US stock market has been extending losses for 3 days in a row. So, as usual, investors rushed to buy the Japanese currency in order to hedge risks. We can also note the consequences of the divergence formed on the daily chart. The quote dropped to the target level of 105.27. The Australian dollar recovered to a 34-month high amid the US dollar's weakness. In contrast to the United States, Australia has a more stable recovery in the labor market. Yesterday, the country unveiled its jobs report, showing that the unemployment rate fell to 6.4%. Yet, technical analysis experts continue to see the potential for a downward movement. To do so, the pair should go down below the level of 0.7732, which will most likely happen only next week. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.